Hello everyone, welcome to Bhadra IAS Nagaland Civil Service online preparation program. Today we are going to discuss an important topic, that is the Monetary Policy Committee. This topic will basically come for your prelims exam preparation. So let's look at the basics, the concept of Monetary Policy Committee. Under the RBI Act 1934 in India, the RBI has the responsibility as well as the RBI's duty that RBI is entrusted with formulation of what we call the monetary policy, where RBI decides the rate of interest, money supply, how to control inflation, etc. Okay. Now, who formulates monetary policy in India? So, if you look at here, the monetary policy is formulated by the Monetary Policy Committee, which was set up in 2016. Okay, in your exam this might be asked. Now, the Reserve Bank of India Act 1934, it was amended by what we call the Finance Act 2016. Therefore, Monetary Policy Committee was set up in 2016. Now, when a body or a committee is set up under an act, that body is called a statutory body. Clear? So what type of body is the Monetary Policy Committee? It is basically a statutory body. Okay. So from exam point of view, remember that. The first MPC, which was set up in 2016, if you look at here, in the very first MPC, today also the format structure is same. There is no change in the format and structure of MPC. We have 3 members from RBI. These are RBI officials, and we have 3 members who are appointed by the government of India. So the 3 plus 3, 6 members become the Monetary Policy Committee members. Okay. So now if you look at the structure, Monetary Policy Committee, who are there? So we have a 3 RBI officials. Number 1 is the RBI governor, right? He is called the chairman of the Monetary Policy Committee. Then we have a RBI deputy governor. Then 1 officer nominated by the central board of RBI. Then these 3 are basically from economics finance background. These 3 are appointed by the central government. For how long? What is their period? They are appointed for 4 years. Okay. So when you are going for prelims exam, this kind of basic concepts you have to be very clear. So now let us look at the current members of Monetary Policy Committee. So we have the RBI Governor Sanjay Malhotra, then Poonam Gupta, the Deputy Governor in charge of Monetary Policy, then 1 officer whoever is nominated by the Central Board. In addition, we have a central government appointed people. We have 3 people. These are all basically from economics background. Okay. So these 6 together become what we call the Monetary Policy Committee of India. So what does the Monetary Policy Committee do? Basically, the Monetary Policy Committee has to formulate an important rate of interest. What do we call this? Policy rate is the name of this interest rate is repo rate. So repo rate, I already made a video few days ago. You can have a look at that bank rate, repo rate. So repo rate is formulated by the Monetary Policy Committee basically to keep inflation within the target. Okay. So now if you look at here, the inflation target in India is set for once in 5 years. The current one is from 1st April 2021 till 31st March 26 next year. Then the target will change. Okay. So now accordingly the government and RBI, they have agreed to set the inflation target in India. So what is the target of inflation? It is 4%. Then we say plus minus 2%. So what does it mean? 4% plus minus 2. So if you look at here, there is something called upper tolerance of inflation. How much inflation can go up? That is 4 plus 2, or normally what we say, the 6% it can go up if inflation goes up. Similarly, if inflation goes down to deflation, how much can it fall? It can fall 4 minus 2, that means 2%. Clear? Therefore, the formula says 4% plus minus 2. So 4 plus 2, 6 is the upper limit, 4 minus 2, 2 is the lower limit, and the target is 4%. This is the inflation target of India for 5 years from 2021 till 2026 March. Very good. Clear? Okay. Now if you look at the further information, the Monetary Policy Committee is required to meet at least 4 times a year. They have to meet 4 quarters and they have to take a decision. For that, minimum 4 members should be present. Then only the meeting is valid. And they take the decision basically on a democratic process, right? How the meeting, they have a voting system and each member gets 1 vote. Since there are 6, if there is a tie, then what happens? The RBI governor will get the deciding vote. Then he can decide whether to increase the interest rate or decrease the interest rate. Now these are all the basic facts, the basic concepts about Monetary Policy Committee, and this topic will precisely come for your prelims exam. Okay, so do prepare the topic very well, and if you have any doubts, if you want any notes also, you can contact us. Okay, for any further query you can contact Bhadra IAS online Nagaland Civil Service at 8638391721. Keep following our videos for more topics discussion. Thank you.